I'd like to welcome everyone to today's ALA Solutions Series webcast, Leveling Up Your Legal Accounting Best Practices to Ensure Financial Transparency and Compliance. Before we get started, I'd like to take a moment to introduce our webinar sponsor, Carrot Legal. As an ALA VIP sponsor, we are honored to have you here today. Carrot legal software that makes life easier for everyone in your firm. From intake to matter management to billing and fully integrated legal and trust accounting, our legal practice management software simplifies operations firm-wide. We are joined today by Laura Kennedy and Jesse Edwards. Laura Kennedy is the Chief Executive Officer and co-founder of Circle Management Group. Over the past 25 years, she has worked with countless firms to migrate, implement, and train their staff on accounting software. Laura has become a trusted partner for law firms looking to work more efficiently and optimize their financial processes. Jesse Edwards is the Vice President of Accounting at Carrot Legal. She has spent the last 10 years leading accounting teams in the SaaS revenue cycle management technology space, fueling her passion for optimizing processes and driving efficiency through technology. Welcome, Laura and Jesse. We are looking forward to everything you have to share with us today. I'll go ahead and pass things over to you, Jesse.
Thank you. Today, we're going to discuss some of the unique challenges of legal accounting, best practices to minimize tax prep stress, and strategies to drive accounting success year-round. Finally, we're going to look towards innovations in legal accounting. Over my years leading accounting teams, I think one of the biggest challenges is building processes that are repeatable and efficient and that lend to visibility in the data and are not prone to human error. I know that this can be even more challenging with very little room for error in the legal accounting space. Laura, from all of your experience, can you talk about some of the unique pain points to legal accounting and why that can make this accounting space even more difficult?
Hi, Jesse. Thanks. Yes, there's a few issues that are specific to legal accounting. One is just the risk of mismanagement, as you're seeing on the slide right now, in both the case management piece and for lawyers, and then also in the accounting piece. So we have legal trust accounting specifically that has to do with managing the client's money that the firm is holding on their behalf. And then we also have areas where we're dealing with advanced costs and just trying to reconcile and deal with the cost advanced and things that are specific to law firms and how they manage those. When we're talking about the trust management, that is an area that has a lot of risk with it because it's an area where lawyers can lose their licenses if they are mismanaging that money, or when they get an audit and the trust account is not up to being balanced both at the bank account level and at the client level or the matter level. So we have a lot of issues there where we need to make sure that we're working through best practices in ensuring that these types of areas are regarded with a lot of care and a lot of reporting and a lot of balancing.
And I know we talked a lot about advanced client costs and the ability to track advanced client costs. Is there any other detail there you'd want to talk about?
Sure. When we're talking about case costs, they're not equal. You have things that you're paying for with your credit cards. You have things that you're paying for with your checking account. You have things that you're paying for out of a client's trust account. So managing those expenses and those costs that you're incurring on behalf of the client have to be done very carefully. And then there's also the reimbursable costs. Those are the things that the firm has that are soft costs, like faxes, and if you're even charging faxes anymore. But copies seem to be still very active in the reimbursable costs area. Copies, freight, a lot of firms track research that way. just things that you're incurring, but you're not necessarily paying a direct cost for. You're not writing a check for that specific expense on behalf of that specific client for that specific thing. We have to make sure we're categorizing those properly. Some firms are set up to track those as an asset account on the balance sheet, and some firms are set up to track those as expense accounts on the balance sheet. I have found over the years that when it comes to reporting and working through the costs, it's a lot easier for firms to manage those costs advanced on the balance sheet as assets, as an asset account, because then you have a rolling number, you know how much you've spent, you know how much has been reimbursed year over year over year. Whereas when you're tracking them as an expense on in the income and expense side, then it closes out at the end of the year. You really never know how much you've spent versus how much you've received unless you pull reports um, from previous years. But it's not a easily found number. It's something you really have to work hard to get to if you're tracking them as an expense on your chart of accounts as opposed to an asset.
Yeah. That makes sense. I think that's a very unique difference in legal accounting. Whereas, just from my perspective, it's like the categories and the classifications, they're not always so nuanced, and it's not always going into compliance reporting. Um, so I know, like, in order to reduce risk in accounting, one of the major decision points is, how can I rely on my technology, and how can I ensure I'm choosing the right tools? Like you talk about, using an asset account versus using an expense account, but it's like, how do I actually pick the right technology? How can I ensure I'm choosing the right tools for my specific problem statement? I think it's really hard, but super important to find a billing and accounting tool that can match your exact needs. So obviously I'm an accountant, so I'm obsessed with Excel. I'll nerd out on Excel with the best of them, and it's a powerful tool. But if you're doing all of that tracking and work in Excel and you're not evaluating technology, then you're really not properly setting yourself up for success. We really want to drill today is, don't run your businesses solely on spreadsheets.
Right, for sure. And also when you are tracking information on a spreadsheet, that's a moment in time. That is a one-stop kind of thing here. And a spreadsheet can be easily manipulated. A spreadsheet generally doesn't have audit trails. It doesn't have tracking as to who did what, when, where, and how. What was it before? What was it after? Um, and so when you're running off of spreadsheets and you're doing that, there is a lot of room for error. So we really do have to be sure that we're tracking things within the system, doing the bank reconciliations within the technology, doing the work that you're trying to accomplish within the software itself. There's a lot of regulations and a lot of ethics that law firms have to abide by when they're doing their financial accounting. There's a lot of compliance. There's a lot of compliance, not just from clients now, but also from the bar. And of course, you have all the IRS issues associated with trust accounts and how you handle that. But the last thing you want to have happen is for there to be any type of issue related to how you're tracking and handling that money. And so finding the tool that can allow you to have the right um, foundation, I would say, in financial wellness that allows you to keep accurate accounting records, to be able to perform budgets, not just for your firm, but also for your clients if they require you to maintain a budget, that can have cash flow monitoring, that cost tracking and control is so important. Um, and also being able to deal with the profitability and the performance reviews that law firms require of their attorneys, not just the partners, but also of the associates and the paralegals and everybody else that is doing anything in the firm. So you want to have that, and the tool has to be able to do your bank recs. It has to be able to manage your trust accounts. It has to be able to run your P&L. It has to be able to run your balance sheet and manage all of those reporting requirements that the partners and the owners of the law firm need to be able to run to be able to control and monitor what the financial health of the firm is.
Yeah. And I definitely find when you're building a process that really should be done monthly, but because it's, pull this into this spreadsheet, then manipulate it, then do this, we have a tendency to make it something that's done quarterly just because it takes so much time and effort, when really it's something that's so important and would be so much less error prone if we just did it at a more normal cadence. But just the sheer time of it
Mhm.
forces it to be quarterly or twice a year, and when in reality we should be doing it, maybe even more often than monthly.
Well, and that's true. And if you have the accounting platform that's going to be able to present the information to you in real time through things like dashboards and numbers and little metrics and KPIs that can show up, you can see where the health of your firm is all along the way. If you're right now relying on reports to be generated at the end of the month, you're retroactively looking at the health of your company, and you're not able to figure things out quite as quickly, and you're 30 days behind all the time because you're waiting for your staff to prepare the reports. One of the biggest um, issues I see with law firms today is that, for the most part, lawyers who become partners and owners of their firms, they don't go to law school to learn how to be business people. They go to law school to be able to be lawyers. So you have to have really good support behind you that can help you understand exactly where your business stands at any given time. I think technology helps the lawyers be smarter because they can see what those metrics are right in front of them every day if they're looking at them. Because it's not just about money in and money out, it's also about where is your money going? How are you spending your money? Where are you needing to pivot? How profitable are certain areas of law? How profitable are certain attorneys and certain staff? All of those things are run through your billing and accounting system. Every single bit of those metrics and things can be found if you know where to look and how to read it. The ability for firms to proactively review their financials should be in your billing and accounting system. You should be able to see an income statement at any point in time. If your team is recording the payments coming in, the expenses going out, you should be able to see that on a daily basis if you wanted to see it. You should be able to see a balance sheet, run a balance sheet at any point in time and see where is your money actually going are you investing it in any way, shape, or form? How are your money markets doing? How are the 401ks? How much do we have to pay out in payroll this month? What's our anticipated costs? All of those things should be able to be found in this day and in this age with a click of a button or clicking on your dashboards and having that appear to you, including your cash flow statement, so that this is July's slow. We're going to be in August is a little bit better towards the end of the month, and you can start to see your trends. And so when is a good time for you to really be able to take that vacation that you need. You want to take it when you're slow as opposed to when you're really, really busy, and things like that. You can really see what those trends are. So
So this will probably kind of put you on the spot. So is there a specific dashboard item that you see that you're surprised that some of the law firms you work with don't use, and you would like always recommend looking in from a technology and reporting system, make sure there's that typical type of report or that KPI, something that you would use to track the health of your business on more than a monthly basis?
I think that there's a few that you need to have up all the time. You have some around billing and collections. And on the billing and collection side, you want to be able to see what your AR is, not just your current AR, but that AR that is older. And that's the stuff that gets ignored. How many of your clients are paying you 30 days behind, 60 days behind, 90 days behind? How many bills and unpaid invoices from your clients do you have that are 120 plus days past due? And what are you going to do about those? Are you going to send them over to a collections agency? Are you going to hire somebody to call them? Are you going to just say, we're just going to write them off? What are you going to do to try to collect on that money? Because That's revenue that is completely locked up that you have no access to at the moment when it's sitting there as an unpaid invoice. What about your work in progress? How long has it been since certain matters have been billed? And what type of time do you have that can be billed that you have, again, you haven't billed for 30 days, you haven't billed for 60 days, you haven't billed for 90. Why do you have time and fees in there that are 120 plus days entered and not billed out to your clients? Because again, you can't tap into that as revenue until you actually produce those invoices. Those two areas right there are where a lot of firms, when I'm looking at their financials and trying to help them understand how to do things, there is that piece. Those two areas where things are locked up and not accessible to you to make payroll, not accessible to you to pay bills, not accessible to you to be able to invest in new technology. So collecting and billing out those things are very important. I think the third one from a revenue perspective and looking at things is of that billing that you have sent out, how much of that has been collected and what's the realization on that collection? Because you have that other piece that is here's your production and here's your billing. And what happens to it between those two actions? The timekeepers put their time in and then it gets to the invoice. How much of that time is written off? How much of that time is being credited back? Are your timekeepers overbilling and you're having to reduce their time? How is that impacting their productivity and your profitability when those things happen? So those three areas I think are probably very key for operational success and feed into client management, client satisfaction with their bills, so they're not calling, complaining about feeling like your billing isn't accurate, and really seeing what are your timekeepers doing with their time. So you have those areas. And when we can get down to the nitty-gritty of those areas, then the firm can really start making good decisions about their money.
Yeah. And we talked about, kind of breaking down the manual process and decide like where can that be a report out of your billing and accounting systems. But we've also kind of talked about how there are many of these systems that have been used, these reports have been used for years and years and years, have been passed down from other, a prior bookkeeper. And can you just talk to a little bit, in some of our prep sessions, we talked about just the importance of actually understanding the reports that are being run and not just running the report for the sake of running it because it's been run before, and kind of the danger of falling into that pattern.
Right. So when I work with when I go in and I do consulting and strategy for partnerships and for the lawyers, how are they going to manage their compensation agreements and things like that? A lot of times it's happening because they have new partners coming on board, and those new partners don't understand really what the reports are that they're looking at. They've been told that this is what they have to use. And so as the technology starts to increase and in availability and affordability, the the younger attorneys are much more adept at technology and being able to read and understand a little bit more about what's happening. And so they call in and they say, "Oh, we need to sit down and we need to talk about these reports." And so we look at the reports, and a lot of them are very complex. They come from manual calculations that need to be done where information is exported out, dealt with in a spreadsheet, and how much a partner can take out of the firm at any given time for their own draws is based on these methodologies. So what happens is these were developed in, say the mid 2000s when the reporting or the technology had a certain number of reports. And over time, those reports grow. The ability for the software to handle reporting grows. New things have been added into the software. But nobody in the firm who is running the reports takes the time to really learn what those new reports can do for them. And so even though they may have the tool right here in front of them, they don't know how to do that or that they even can do that. So we end up needing to go back to the basics and say, okay, here's the reports, and here's how you can do this without having to export it to a spreadsheet. If the attorneys are willing to look at that information in a different format as opposed to the way they've seen it for the last 20 years, we can make some progress in the efficiency of getting those reports even automated and emailed to them instead of having to wait for someone to print them and put them on their desk in a binder.
Yeah. Yeah, so I think this is a great start for some of the, key bullets of, how to kind of achieve year-round accounting success, really focus on, what reports should be out of the system. It's key to know what data points you should be proactively requesting versus waiting for at the end of the month, at the end of the quarter, at the end of the year, and really understanding and having a baseline expectation of what your reports should actually be telling you so that you know that you're getting the right information on the right cadence. So without ado, if we're after we talk about kind of that, let's move on and talk about best practices for tax prep and tax season. If you're doing all the things that we just talked about, you're understanding your reporting, you're doing everything on the correct cadence, you've really reduced some of your risk, and that will flow into your tax prep, and your tax prep should really be easier. But is there anything else that should really be highlighted or considered when we think about specifically tax season?
Um, I think taxes happen when taxes happen, everybody is in a rush to get all the things done that they didn't do all year long. You're catching up on your bank account reconciliations. If you haven't done it, you might be 2 or 3 months behind, especially if you've got multiple bank accounts and they're very active bank accounts. You might be mid-processing um, and you're not closing out your months on a timely basis. So all of a sudden you've got all the months to do and you have all of those things, but you can't really do the months because the attorneys haven't put in their expense reimbursements to you yet because they're lagging behind. And so you can't close the month and you're waiting for everybody to do everything. So I think finding ways to encourage people to do these types of activities that are holding you up, whether it is um, the the expense reimbursements. Let's talk about that for a minute. If 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 the attorneys are still having to copy their receipts and manually bring you a piece of paper with the receipt and on a written form, we are missing the mark on how technology can help you today. There's technology out there where the attorney or the person who needs the expense reimbursed can take a picture of that receipt and get it into the system very, very quickly and get that over to you and get that into your accounting system for reimbursement. One of the stresses that I have heard from attorneys when I interview them on workflow and processes that get them hung up is the whole experience of getting their reimbursements in. So that is something that can help, is to make sure that everybody gets their expenses in on time so that you can do your bank reconciliations, write your checks, and get your reports out, and finalize that month end. In terms of some of the other things, making sure that if you are in a system that has all of the billing and the accounting in an all-in-one arena, like Carrot or PC Law, some of these other ones where it's an all-in-one system, then making sure that you have the processes in there to be able to run out those reports, and you're really leveraging those. But if you have some that are disjointed, where you have your billing in one system and your accounting in another, find a way to make those two things talk to one another so that you are reducing your manual entry throughout the year, making sure that you have all of those things kind of feeding each other, and all you're doing is cross-checking as opposed to having to sit in and take the time to manually enter those things. Um, the other thing is to be sure that you're on top of your tech. Make sure you run your updates if you're not on a SaaS-based product where the updates are done on a regular cadence for you without any intervention on your part. If you have products that need to be updated, you should get those updates run. Don't delay on those. If you're running premise-based programs right now and you are not leveraging the subscription models that are available to you to keep your stuff updated, then that's a pretty big risk. And I would make sure that all of those things are done. And if you are running on those premise-based products, and you haven't considered moving into a SaaS-based product, investing in your technology and getting that upgraded throughout the year is a good thing as well. I'm not a big, I'm not promoting or saying, you can't run a premise-based product. That's not what I'm saying. What I'm saying is either keep up with your updates or move somewhere to the cloud where those updates are done for you.
Definitely. At Carrot Legal, we speak to so many firms who use separate accounting systems and billing systems. And then it's just increasing the number of touches, increases the risk of manual entry, compliance errors, and really highlighting some of the benefits of that integrated legal specific software, for sure. I mean, for me, I find if I'm doing the same time consuming manual error prone work over and over again, I feel like you just have to invest in yourself and your business and evaluate a software solution. I know there's a lot of fear of implementing new systems. I know I have it, for sure, in how in how I lead my own accounting teams. But I've definitely learned that like you can't let a new system stop you from the long-term gains. And even just not even just a new system, just like you said, taking advantage of updates and upgrades that they offer, because you don't want to be left behind in the dust of the new technology. So again, just finding ways, looking at tax prep, looking at year-end accounting success, like really, really ingraining, like just don't try to run your business solely on spreadsheets. As much as accountants love it, the tendencies to get with your reporting, get out of this, get into something more automated, integrated, will really aid tax prep in your accounting success.
Jesse, I'd like to just talk about that for just 1 minute before we go into the
Sure.
next session or section of this arena. When we're running things on spreadsheets, or we're running things on outdated tech, just generally. When we started out this conversation, we started talking about the risks to the law firms, and we started talking about mismanagement of cases and mismanagement of money. But there's also another risk, which I would call pressure points, where technology and the people using the technology and the processes within the firm begin to pose a risk for that firm. And when that happens, there is such a high risk level because you're trying to do processes that are current and that your clients are expecting you to do based on what other experiences they've had with other law firms, experiences they've had with how quickly they can get information and on the web, how quickly they can order things on Amazon, how they can have things delivered with Uber Eats or something like that. There's an expectation of how quickly information can get generated today. And when you are working with outdated technology and you are working with outdated processes and outdated procedures within the firm, that trickles down to it trickles all the way down to the financial side of the business. Because if the firm is working on outdated technology and the lawyers are having a hard time managing getting all of the things that you need from a financial point of view to get their time in, to get their expenses in, to get the payments posted, to get the trust money posted. If you're relying on somebody to send a check, or you're, running a credit card machine with the old style that put the thing on there and run the carbon copies. Those are the kinds of things that are going to slow down the firm and really slow down the financial health of the firm. So as you're looking at your technology and you're really deciding what you want to do, make that investment. I think a lot of firms look at, when we talk about financial wellness, they look at technology as a whole as an expense, as opposed to an investment. And when you change your mind just enough to look at it as an investment, you're saying to yourself, I'm going to spend this money, I'm going to make an investment, and I'm going to hope that there's a return on that investment in the future, because we'll be able to get our time in faster, get those bills out faster, get it paid faster, so our attorneys can bill more time and collect more time, and we can become much more efficient, and we're not running our business 30 days, 60 days, 90 days behind. And that really helps to energize the firm. People feel like they can actually produce work quicker, they can get more done, they feel more empowered to be able to do that better and faster and more accurately because the technology is there to support them. The other piece of that has to do with ensuring that the people in your firm know how to use that software. So I think that training and keeping up with the updates and attending the webinars and attending for the vendors and making sure someone in the firm is staying on top of the new features and the new functionality helps to keep the firm healthy. And staying on top of the technology also keeps you safe in terms of cyber threats, cybersecurity issues, the risk of ransomware coming into your firm that's going to cost you even more money than upgrading your software would ever cost you, and the and just making sure that we're all running in that same space. You're going to have a lot better financial health.
Yeah, absolutely. So kind of speaking to, going to webinars like and staying up to date with what's available, can you speak some more to additional innovations that you're kind of seeing in the legal accounting software space, things that make you excited, things that you're introducing to your clients? So,
Well, I think a lot of those are up there right now. There's the three-way trust, and the a lot of firms are deploying the three-way trust reconciliation, even if their bars um, aren't requiring it yet, because it does help to make sure that your bank is balanced and that all the client ledgers are balanced against the bank statement. So that's a really good one. And more products are having that, but Carrot does a really good job with it specifically in here. And that's an innovative step that a lot of the vendors have introduced into their accounting. Um, Being able to flip back and forth between cash or accrual, because you do want to see how your accounts receivable and your accounts payable are going to affect your income. And really, that's what modified cash is for those of us who have been around this industry for a while. There's cash accounting, there's accrual accounting, and then there's what's called modified cash. And um, that's what allows us to run things like uh, our assets in as costs advanced, to be able to see how our accounts payable are performing on our balance sheet, how, if we're tracking accounts receivable, which some firms do and some firms don't, how is that affecting our work, and being able to identify from those costs advanced what we're never going to collect and push those down into bad debt as an expense. A lot of accounting programs are also making it easier to produce W-2s, 1099s, all of those through the system with a one click. Let's go ahead and track what's going on with our vendors type of thing. And then finally, just being able to handle a lot of this, the new information coming in and handling the integration. So I think that having that integrated solution is important because that reduces manual entry or even posting issues. So
yeah.
those are,
So I think we've talked a little bit about tracking attorney profitability, but I know that in some of the innovations enhancements, there are items that really make that more robust and more at your fingertips. Is there anything you want to call out there?
I think being able to track an expense that you're paying by the particular attorney that's incurring it, being able to understand what the profitability is for a specific person on your team, not just for the income or the revenue that they're driving in, but what is it actually costing you? Some systems
Yeah.
give you the ability to track that overhead cost as a single number, and other systems allow you to track what those costs are for salary, for bonus, for cell phone, for CLE, for what are they incurring in terms of mileage on behalf of the firm, those non-reimbursable expenses that are incurred that you cannot charge to a client for any reason. Those can all get distributed out to all of the reports if you're tracking that stuff specifically to that. You can actually in some of these systems, you can run a P&L out by individual timekeeper if the income that they generate and the expenses that they incur are tracked within the general ledger. And that can really help to determine bonuses and overall profitability.
Awesome. So when you're working with clients, what do you see as like the number one reason that there is a hesitancy to upgrade technology?
Oh, there's a standard list of of things that I hear. One is that they can't afford to have their timekeepers out of the system, either for an upgrade, an update, or a migration from one system to another. The fear of lost time in their current system, not the lack of efficiency that they currently have is a known as opposed to the unknown, which is how long is it going to take for how much time are they going to have to spend training and how long are they going to be out of the system? All of those things in a good migration or a good implementation should be addressed at the beginning, but that's one of them. But the truth is there's no good time to do a migration or an implementation to a new system. So I think you just have to pick the slowest time that you have, and if you're thinking about it, to do it. Um, I think the other part of it is sometimes the cost of making that change, just dollars wise, can be a little overwhelming, especially if they, have to start making decisions about data transitions and things like that. There's the cost of having your data all in one system, and then there's the cost of not having your data all in one system. So just kind of being able to weigh those things out and make good decisions around that. I think some of the others are um, probably all little offshoots of those of those
Mhm.
two of those two big fears.
Yeah. So it's just really reframing it and the investment and what you're going to get on the back end. And I know that timely data there it's priceless, especially when you're running a business, and ultimately everyone is running a business.
And
Um,
retroactive data too, Jesse.
yeah.
If you can bring in your data and you can have it all in one, then those types of reports from one period to the next, from one year to the next, previous year versus current year, all of those reports are available to you. If you can bring that into the system that you're migrating to. And when you choose not to do that, then you're back to the big one that I just said over and over, and you've said over and over, you're back to spreadsheets because you're then back to reporting in spreadsheets, and you're looking at your previous year and your current year, at least for a short time, in spreadsheets.
Yeah, absolutely. Any other closing thoughts, or should we move to Q&A?
Um, My only thoughts are, if you can find ways to automate, if you can find ways to put your workflow in, if you have a system that allows you to have that integration, if you are on the most current version of the software that you can possibly be on for your billing and accounting system, that is awesome. I think when I cringe whenever I work with a firm, and not that it's insurmountable, but when they're on old systems because they just don't want to spend the money to get on a current system, when the backbone of their business is on unsupported versions of software, it just makes me really crazy because there's so much risk to that. There's so much risk to running on these outdated platforms, and it's just so filled with data loss and things like that, that it's just really best practice would be to be on a current version of your system.
Absolutely.
Okay. So what kind of questions, Jesse?
Oh, great. Thank you so much, Jesse and Laura. We really appreciate it. I do want to remind the attendees to get, if you haven't already, we do have quite a few questions that have come through, but if you haven't already, go ahead and start inserting your questions in the chat box. You can do that by selecting the everyone option next to the two. And then we'll go ahead and get started with some of these. I first we had a couple different questions coming in. Okay. All the technologies are great, but not if you can't get the attorneys to actually use them. Can you advise on how to get around that?
Oh, well, I think first and foremost, I'll try to frame this as a as easily as I can. I think involving them in some strategy sessions might be helpful. And that's one way. The other way is there's some people that are just not going to do it, no matter how hard you try to beg them to put the system in there. But there's also change management training that can happen, um and some workflow process, and having them at least commit. If I remember when back in the day when I had some clients that were just learning how to use a mouse, and I think if I think people can overcome their own objections if they open up their mind enough to understand how it can help them. But there's just some that you're not going to be able to do it. But the only way I've been successful getting people to change is through change management strategy sessions and commitments from the partners to do what they can to ensure that people are actually using the system. So that's really a leadership question inside the firm, and it's going to be up to the leaders of the firm to decide what is going to be appropriate usage of technology and what's not, and what has to go in and what doesn't. And if the leadership are part of part of the team that's not using the technology, then that's a cultural thing that needs to be looked at inside the firm.
Yeah, I think definitely like the what's in it for me and having that exercise to like give everyone a selfish view of what's in it for them. And that's something I've seen successful when we're taking a team through like any kind of really any kind of change, but especially system changes.
Thank you so much, both of you. I'm going to jump to this next one from Aaron. I do have one of those old, outdated, basically all-in-one accounting and billing programs. I'm looking forward to an upgrade, but worries about the process. Can you speak to an experience with Carrot or anything else about transferring data?
So when we go through the planning for a migration or a transition from one software to another, there's really pretty much three key things you have to think about. You have to think about what product you're going to do and what's associated with that, and make sure that it has the feature set and the functionality you need. The second piece is the implementation side, which is making sure that your software is configured the way that you need to have it configured, because most of these platforms are configurable, and making decisions about how you're going to use it is as important as making sure that the feature is there. Also, that includes the training and the support and the time and that time investment. The third piece is the data. If you're coming from another system, you have to start making decisions about your data. And the sooner you can come in and you can work through some type of a data assessment to have either the vendor or a consultant come in and look at your data and run scripting, things like that, to look for issues with your data that you can start dealing with, the better your migration is going to go. I think there's the idea that everything should just go over the way, everything should just go over, and there's this magical little thing that happens, and it goes from your system into this new system, and when it gets to the new system, it's going to be beautiful and perfect, and that's not what happens. What happens is your data ends up going in exactly the way you had it in your old system, and then it feels like a shock when you see that things are a mess, but your data was a mess. So the sooner you can get your data addressed, your data issues addressed, or a plan to address the data issues before the migration starts or before the change happens, the better your whole process is going to go all the way around. A consultant can also help you get realistic expectations about what these things are going to cost. And the other thing I would encourage you as you're looking through your various options is that when things are free, you generally get the value of free when you're talking about implementations and you're talking about migrations. So those are my few pieces of advice that I can give you to start thinking about what a migration would look like in the future. I hope that
Thank you.
answered your question.
Lots of things to consider at least, right, Laura?
Right.
So another question, what's the best way to stay on top of monthly reporting? And what reports should you be running on a monthly basis?
Well, the best way to stay on top of monthly reporting is to ensure that the data gets into the system. So don't let those bills pile up and not get entered in, and payments, and like I was talking about, just the things that have to come in order to create your bills and pay your bills. The reports that you need to run on a monthly basis, I would recommend at least at the minimum an accounts receivable report, an aged work in process report, a, a outstanding expenses report, what has not been billed, what has been billed and not paid, so that you can at least try to do what you can to recoup the costs that you have outlined and on behalf of your client. You want to make sure you run a trust ledger report, trust balances report. Know what's in there. Make sure that the money in your trust account matches the money in your trust bank account. Those things should be equal at all times. The others would be from a timekeeper perspective. Obviously, you're going to want to, if you're an owner of the business, you're going to want to see what the hours reports look like, what the billable versus unbillable hours look like, the productivity reports that you can run out, and also the profitability reports. I think knowing whether or not you're collecting on the work that's being produced, however you need to do that out of your system is key.
Thank you. Then I had a question. Can you still track them as an asset if you're using cash accounting? I think that this came up when you were speaking to distinguishing case costs, maybe?
You can, and the preferred way really for most accountants to do that right now is to track them as an the advanced costs as an asset account. The what ends up happening is if you assume that you're spending it as an expense, and you're collecting it all within the same period, those two things are going to wash themselves out. If you can't collect it, it's going to go to a different expense account anyway called bad debt. So that expense will always be there. And even if you're running it as an asset account, you can still move things from the asset account to bad debt as an expense and expense out your bad debt. The accountants end up figuring out what the advanced costs look like anyway behind the scenes, and have to account for that somewhere in your accounting, however they do that for tax purposes. So I think personally it's a lot cleaner from an accounting perspective to run that ledger continuously as an asset account so that you always know what that number is, and then deal with what part of it you need to deal with at tax time with the accountant. But more and more accountants are wanting it to be an advanced cost account as an asset account, and more programs are forcing you in that direction.
Thank you. And I'm going to try, there's a couple questions all in one. So, with all the legal management and accounting alternatives out there, is there a platform that you recommend for a law practice, and what key factors should be considered when selecting one?
Hmm. That's a whole assessment right there.
Is that a separate webinar?
That's a separate webinar. I think that I think that question can be answered differently for every firm, depending on what that firm's goals are. And that's something that we can certainly talk about. If you want to give me a call, we can talk through that process, but it certainly is a separate conversation because what you
If
want
we,
is different from what someone else needs.
yeah, what if you reframe the question to say, like, if you were thinking about evaluating software, what are the three things you should know about yourself or your end goals that would help you go into the process?
The Again, the goals for every firm are going to be different, but I would look at your what are your revenue goals? What are your profit goals? And are you growth minded in your business? Are you looking to attract new talent, or are you looking to wind down your business? And so where your business sits at any particular moment and what your overarching goals are going to drive what software decisions you're making. Do you update, or do you upgrade, or do you change platforms altogether? Um, if you're looking to attract new talent, for example, and you're wanting to grow your timekeepers by, 30, 40, 50%, I certainly wouldn't be running a program that cannot be run on a cell phone. So you're not going to attract new attorneys if they can't manage what they have to do from their cell phone. Our son is an attorney, and he has three very active kids, and he does a lot of business and a lot of work from his cell phone. As he's doing what he needs to do. He's reading and reviewing and responding to his email, and he wants that email to be automatically attached to the matter in his document management system, and he doesn't want to have to reply to it and then have to go into the office in the morning and attach it to all of the matters the next day. It needs the workflow, and the automation needs to be there to be able to handle the way that the ones graduating or recently graduated from law school function, and it's completely different. And understanding those generational gaps, understanding the culture of the firm, all of those things are going to drive the factors that you're looking at when you're trying to decide what type of software you want to implement. Where are the gaps? What needs to happen for you? You might have a great practice management system, but you don't have a great document management system. You might need to do client intake, and so all there's a lot of factors that go in as far as where are you struggling specifically in your firm, and what needs to come together for you.
Thank you. I think we have time for just one more question. And thank you. It looks like we have Santina and Maria in the chat offering to reach out to people that we aren't able to get to. So we will make sure that Carrot Legal has all of this information. So those questions that we could not get to, we will be addressed directly after this event. But last question. What's one accounting process workflow that you see law firms don't automate and could save the most amount of time or make the biggest difference?
Um, the biggest one is writing checks for each individual transfer from the trust account to a client's bill, writing one single check for each one. Most bar associations will accept that a report of transactions that are automatically dealt with during the billing cycle are sufficient, as long as you can show that these transactions on this list equal this deposit that was made into the operating account from the trust account. As long as those numbers all match up, then you're okay as far as an audit goes. But for those who are still printing out a check, or waiting until all of the bills have been finalized and then writing checks from the trust account and re-entering all of that, that is a process that can be streamlined so much better with the system by turning on those trust account transfers at billing and allow those transfers to go and be applied to that invoice, run the report, do the transfer online is so much more efficient.
Okay, thank you so much. I'm going to pass it back to Jesse and Laura for any final remarks, and then I'll close us out.
Thank you, Laura, for sharing all of your expertise. It's been lovely speaking with you for this hour. Appreciate everyone being here.
Thanks, Jesse. It's been an honor, and thank you to the ALA for allowing this event to happen, and to Carrot for sponsoring it and having me be a part of it. So thank you very much, and to all of you for attending.